Good morning, everybody. This is the live market open for Friday, April 8th. I'm Yohay, Elam, Forex and Market Movers podcast, doing the show as usual for FX Street. Good morning, everybody, here in the room. As always, we'll cover recent developments in markets, talk about various charts and levels, run through our regular ones, and of course, your questions about others are welcome. Discuss the next, less than 24 hours. Do a preview for next week's big events, as we do every Friday, and of course answer your questions as always. If you cannot see for any reason the chat alongside the video, please go to the address here, okay, tlk.io/fxread-forex-live-video. So what's going on in markets? Well, yesterday we had an extension of the crash of the dollar yen, basically the surge of the Japanese yen across the board. And finally, it did some bounce back. Now we're currently still in the 108 level in dollar yen and at very low levels for yen crosses across the board. Nevertheless, it's a significant bounce back. What's going on? What's this bounce back about? Let's look at the chart where we talk about this bounce back. As you can see, this big crash of dollar yen. It began earlier this year, but in recent days it has certainly accelerated. We were at the 112 handle not that long ago, okay? And now we dipped yesterday under 108, okay? So now we're seeing some kind of bounce back. It could be a correction and necessary profit taking. It could be that, remember that in Japan we're already just entering the weekend, okay? They're ahead of us in terms of time. And it could also be a result of some jawboning from the BOJ. Okay, so far the Bank of Japan and the Ministry of Finance in Tokyo have been a bit useless, or sorry, I'll use a more proper word, a bit incompetent. No, that also isn't a nice word. Anyway, they haven't been able to stop the strengthening of the Japanese yen. Needless to say, stronger yen means that imported goods are cheaper. That means lower inflation. The Bank of Japan doesn't want that. And it means that Japanese export are less attractive. Okay, currently we're at 108.79. I would say, it's hard to pinpoint any specific lines because it's been quite a ride, all right, as we say. So yeah, at the moment, I mean, for today we've hit this level here at 109, which is a round number. 110 is much more significant resistance. The low so far, which it's hard to say if it'll hold or not. Currently, we're a lot above this low, okay, 107.67, but that was sort of a swing low. Currently, it's a significant bounce, but within a very clear downtrend. Stability or a bounce back is also seen with the US dollar. The US dollar suffered quite a lot. Yesterday, we had euro dollar. Or the day before yesterday, had it rise to new highs, getting close to the post-crash high of 2015 of last year of 114.60. We reached 114.54, and from there the pair dropped back down. Okay, we'll talk about some of the reasons for that. It's related to things we heard from the ECB. You know what? Let's talk about it right now. Oh, sorry for that. Anyway, so the ECB minutes, they were meeting minutes from the decision made back in March 10th. Okay, a bit stale. What they did show there is, what I found very interesting is that first there was a discussion about a rate, further cutting the rates back in that decision. Okay, and secondly, that the members reached a conclusion that if they had cut rates, it would have already reached the lower bound. Okay, that means, I mean, it's easy to derive from here that currently we are not at the lower bound. Okay, let me explain a bit more about that. So, because the lower bound is a term that the policymakers in Europe used for quite a few times. All right, so when the ECB lowered for the second time to negative rates back in September 2014, Draghi said, okay, we've now reached the lower bound on rates. There was some talk about QE. QE wasn't active then. It was at some point people thought it would never come in the Eurozone. So QE was the big focus, but they said we have reached a lower bound. As we know, since then, during 2015, they opened the door for more cuts, talking. And eventually, in December, they cut it to -30, from -20 to -30. And in March, they cut it even to -40. And in that meeting in March, Draghi said basically, okay, we're not going to reduce rates further. But now the meeting minutes show, first of all, that they haven't reached their lower bound. There is room for more cuts, which is, this is a repeat of this in a much more meaningful manner. And and it was discussed. Of course, it means it wasn't off the cards. And another thing to note, this lower bound is not that meaningful. When the ECB says lower bound, it may not be exactly the lower bound. So in any case, we haven't reached that lower bound. That was a bit bearish for the ECB. I was focusing yesterday on a speech by Draghi. Draghi basically didn't say anything new. And the meeting minutes, which are, as I said, stale, a bit old, for me, they stole the show, okay? So it was... that helped euro-dollar, pushed euro-dollar back to range. That and some general dollar strength. Let's go back to the slides. We had quite a few events yesterday I want to cover. And of course, currency pairs. We had US jobless claims stable at 267, not that meaningful. Good morning, Pan. Good morning, Fabian. Good morning, Jake. So we had also yesterday consumer credit, a bit better than expected, not that meaningful. As I said, Draghi did not break new ground. Didn't say anything new. Another thing that helped the dollar across the board is that Yellen, she had participated in a panel with all her three predecessors. The ones before that are just not with us anymore. So it was Ben Bernanke, Alan Greenspan, and Paul Volcker. All of them, the latter two are quite old. Anyway, she was relatively upbeat about the US economy, still worried about the global economy, as we've learned earlier this week in the meeting minutes. But compared to her previous two speeches, she wasn't extremely dovish, okay? It was sort of not as terrible as it could have been. All right, so that also helps the dollar recover, stabilize at least, not extend the sell-off. And more figures, we had the Japanese current account, positive 1.73 trillion yen, and the Fed's Esther George, the only dissenter, not the only hawk, certainly not the only hawk, but the only voting member that voted against a rate hike, against leaving policy unchanged and for a rate hike, Esther George of the Kansas Fed. She said that it's better to act sooner than later. No surprises. When a hawk is hawkish, it's not a surprise. Okay, so that was quite a busy day yesterday. And we had, let's look at a few currency charts. Okay, so here we are with euro dollar, 113.35. Even though it was breached at some point, I still see it as some kind of support. Okay, the pair has become choppy. 114.10 returns to resistance, but 114.60 is stronger resistance. If we fall under 113.35, I think 112.50 is the next line. The pound, okay, yesterday the pound moves mostly on politics these days. Today we do have a release. So why is this line not aligned? Yeah, okay, that's better. Oh, okay. Anyway, 140.50 remains support on cable. Okay, this line was breached earlier this week. We reached 140. 140, the round number, proves itself to be also nice support. It wasn't always the case in the past. 140, 125, and 141. More importantly, 141.75 work as resistance. Yesterday, British Prime Minister David Cameron did admit that he profited from the offshore funds his father inherited to him. He didn't answer all the questions. There's still a political uncertainty about the dealings of the Cameron family. In general, they denied that they will make any further profit. He's in a mess in general on this topic. Of course, the opposition, the Labour Party, is on him, on his tail, but also ministers. I mean, also rivals within his party. Some of them campaigning for Brexit are taking advantage of this. Okay, some like Boris Johnson are defending Cameron on this and attacking him on Brexit. Anyway, and this political uncertainty of the British Prime Minister, together with the Tata Steel crisis, well, it's fading out a bit, but of course the Brexit continues weighing on the pound. Okay, so these are the lines to watch there. Let's continue to dollar CAD. Yeah, lines are a bit blurring here. We reached already 131.80 yesterday. Now we're back down, 130.95. So the Canadian dollar is gaining some ground. Oil prices are looking okay. They already dipped to lower ground. Now they're at the higher end of the range. So yeah, so I would say that we had, oil prices are on a recovery path. It was mostly the inventory data this week. It showed a drawdown in oil inventories for a change. Usually they're just piling up. We reached resistance here at 38.35, then made a nice dip, and now we're back up. It's under the $40 range, but in comparison to earlier this week, oil looks good, and so does the Canadian dollar. Okay, so we are seeing some recovery here. 130.80 to 131.70 is currently the range. 132.20 resistance and 130 further support on the extremes. The Australian dollar falling support here at the round 75 level. Currently 75.40, a bit bouncing from the lows. Some optimism towards the weekend. Weakness of the Japanese yen, risk off. We're seeing the Aussie move. Significant events for the Australian dollar next week. Kiwi dollar. Well, Kiwi dollar now showed a lot of resilience earlier this week. This isn't the case anymore. We're under the 68.20 level, which is has been chopped through. Anyway, 67 is support and 68.80 is high resistance. Dollar Swiss, it reached already lows of 95.20. Now we're in higher levels. The US dollar is recovering just a bit. So it's also reflected here above the 95.50 level. 96.40 is high resistance. Euro Swiss a bit lower. So it's gradually ticking down. So we've settled under the 109 handle. Moves are quite limited. Support at 108.60. Euro pound reached new highs yesterday, above 81 cents. Now we're under this level at 80.68. The 80 level is still of significance. The pound is weaker than the euro. In case of a Brexit, the pound will suffer more, at least in the short term. And of course, if we don't have a Brexit, which is the more likely case, on June 23rd, I believe we'll have the pound rallying across the board, because currently fear is priced in euro yen. Quite a nice, we had the big crash throughout the week. Basically, it's the crash of the strengthening of the yen. Currently 123.45, 124.20, some kind of resistance. 122.50 is support. Okay. So this mostly reflects the strength of the yen now fading out a bit. Now we're seeing this profit taking. So euro yen is higher. Similar, dollar yen looks a bit similar, not really similar. And also pound yen is off the lows, and these are quite low lows. 151.80 is support, currently at 153. When we were doing the show yesterday, we were at 153, breaking under the previous low of 154.65. Anyway, we're still at levels last seen in the summer of 2003. Okay, So the yen is selling off just a bit, but from very significant high ground. All right, let's see if have any questions here. Bon dia, Sinatra. For those of you who don't know, bon dia is good day, good morning in Catalan. Okay. More news from the UK. Oh, no, it's from yesterday. Prime Minister admits he did have stake in father's offshore pound. Yeah, I saw a tweet here. Anyway, a question here. Do we see a risk off or just a necessary correction after yesterday's decline? That's a good question. First of all, it's a risk on move. We're seeing the Australian dollar strengthen, the Canadian dollar strengthen, New Zealand dollar a bit lagging behind. So it's a bit of a risk on sentiment. I would say a few things also. It's already the weekend or the end of the world. The working day is about to end or ending in most of Asia. Okay, so and the week is ending. So profit taking is, of course, easy to put the finger on profit taking, and some risk off things. Risk on. Things are looking a bit better. Regarding this risk on, I'm not sure it'll continue until the weekend. Will also, the weekend here in Europe and in the United States, there's still some trouble all over the world. So I think that the markets are not finished with buying the yen. All right, I think we do have a chance, maybe not today, but perhaps early next week, to see another wave of yen strengthening. Okay, so to me, looking at the dollar yen chart, for example, it looks like a necessary correction, necessary profit taking, not a significant turnaround. And markets have already beaten the Bank of Japan, and this could this could happen a bit more. Okay. Yeah, risk on. Okay, now let me see. I saw the comment. Okay, so we talked about events we had yesterday. We talked about what's going on in markets, a few charts. Let's see what's going on today. So we had the German trade balance earlier today, and let's see what happened there. Well, a bit better than expected. Hope you can see the data easily. Anyway, surplus a bit higher than expected. Germany's trade surplus, Germany's exports, that's one of the reasons. That's one of the things that keep the euro bid, that keep money flowing into the eurozone. Okay, and the good news from this release is that exports are up more than expected. So it's not only so it's more economic activity, which is of course good news. Some good news for the eurozone. Well, from France, industrial output did disappoint. This divergence between France and Germany continues. Germany is doing better than France. In Switzerland, we're still prices are falling. Of course, the Swiss National Bank would like a weaker franc. Anyway, we're currently doesn't move the franc so much. CPI year over year is negative, minus 0.9, worse than in the eurozone. Outright deflation. At least prices moved up in month over month. At 8:30 GMT, 10:30 here, the clock on the FX Street calendar shows the time in your time zone. In my case, in Barcelona, Spain, Central European time. Anyway, we have two releases in general. We have the industrial output release and the trade balance. We're seeing here a lot of big breakdown of figures because we have together, we have a split between industrial output and manufacturing. Manufacturing is around 80% of industrial output, and we have the month over month and year over year figures. Because we have so many figures at the same time, we need all of them to move in one specific direction in order to get a better better move. Okay, so in general, we're expecting well, very limited moves month over month. Industrial output is expected to rise 0.1 and manufacturing to slide 0.2. Nothing earth-shattering. Year over year, perhaps more important, industrial output is expected to remain flat and manufacturing to dive 0.7. In the UK, like in many other developed countries, manufacturing is, or industry, classic industry, is on the fall. It's taking a smaller and smaller proportion of the economy. Services take a much bigger part of the economy. Okay, we need, again, to see all the figures move in the same direction. At the same time, we also have the trades balance, the goods trade balance deficit, similar to last month, is expected. So, yeah, again, if all figures, including the trade balance, move in the same direction, it could have a meaningful impact. Usually what we have with UK releases, I repeat this every time, is that we have some commotion before the publication. We have the markets front running. Sometimes it's a rumor, sometimes it's a leak, sometimes it's just pure speculation and the outcome. And then we can see a buy the rumor, sell the fact reaction. Okay, so again, the political issues are left, right, and center. Okay, next week we have the Bank of England, but currently politics overtakes at least industrial output. Okay, for those of you trading, well, the Canadian dollar is the star of the day because we have employment figures in Canada. So before that, we have a warm up with housing starts, but more importantly, the employment situation in Canada. The most important figure is the net change in employment. Employment change after a drop of 2,300 people out of the ranks of the employed last month. Now we're expecting a rise of 10,000. Unemployment rate in Canada is expected to remain unchanged at 7.3. As always, when talking about the unemployment rate, we should look at the participation rate. But I think that in this case, the headline figure, the net employment change, is key. Canadian dollar in general is looking okay. We had a recovery in oil prices, but if we have a fall in employment, it's of course bad news. Well, expectations are for a bounce back. Let's be optimistic for Canada. Anyway, we also have a speech by Bill Dudley at the same time, 12:30 GMT. He's number 3 at the Fed. The president of the New York Fed has a permanent vote, and let's see if he usually tends to be dovish, like Yellen. If he goes a bit hawkish, that could boost the dollar, but the markets are afraid of Yellen's dovishness at the moment. So anyway, if he goes extremely dovish, well, he would need to stand. If he's only moderately dovish, it will not stand out. If he's extremely dovish, it'll stand out. If he's very hawkish, it'll stand out. Okay, but it's not as important because we had Yellen speak for the 3rd time in 3 weeks yesterday. So she's of course number 1. We also have wholesale inventories, and in the United States, and the GDP estimate in the UK, it's actually completing the first quarter because it's a 3-month moving average. So last time we had a rise of 0.3. Let's see what shows this time. It's not an official release. It's not as important. For oil prices, we have the Baker Hughes rig count at 5 GMT. We know that they fell quite a lot in the past year and a half or so, but it's not as important because the number of rigs does not always reflect the actual oil production, right? Because rigs have become more efficient, the ones that are operating, and the amount of oil that is pumped out of the ground is huge in any case. Okay. Let's go back to the slides and see if I haven't missed anything. Let's see, maybe I have more questions. Yeah. Senator says yesterday was a comedy show by the Fed. These guys have a good reason to laugh. Yeah, I didn't see that. I must say it was a bit late for me. I had other things to do. Usually central bankers, well, the ones that are in power, that was only Yellen yesterday. She didn't, they try not to rock the boat too much. The ones that are retired can say something, but seeing interviews with all these other guys, even after they retired, yeah, sometimes the joke is on them. Anyway, was good to hear from Yellen, at least, that she was optimistic about the economy. This doesn't always happen. All right. Okay, let's see if I haven't missed anything. Well, we talked about all the events today. I think I missed something regarding, yeah, some stability before the weekend, some profit taking, some better mood in markets. One thing that could ruin the mood, we had copper prices, contrary to oil, copper prices are sliding. They had a bad week. That could that doesn't bode well for the Australian dollar. Australian dollar is relatively close to the lows, bouncing up, but we're seeing more strength in other currencies. So it's something worth watching, especially ahead of next week's big events, including Chinese GDP. Okay, we have a few more minutes. As usual, we'll begin to wrap up earlier today on Friday, and then talk about the preview. We'll do preview for next week. Question here: what is your look? Crude oil this morning. Well, I remain bearish in general on oil. Where did that chart go? Let me get that chart. Okay. So here we are on, well, as I said, bearish on oil, we're seeing the price rising. So maybe just take my words and go contrarian. So oil prices are rising as we speak. They're up 2% on the day, getting close to resistance there at 38.35. In general, I have a few reasons for this morning. Yeah, the mood is positive. I don't think it'll reach $40. There are reasons to sell oil. Okay, this week we had a drop in inventories, and that was a positive change, but it could well be a one-off. What we've learned in recent weeks, when oil prices did rise above $40, okay, they made a huge, if you look at WTI crude oil, it already reached a low of $26, and then it went up to above 40, so it's above 50% bounce from the lows. That's amazing. Okay, in percentage points. Of course, if you look at the bigger picture, then we fell from 100 to 26 and then to 40. It's still, oil prices are still low. What we've learned during this period of time, when oil prices did bounce back up, when optimism returned to the markets regarding demand, when we began seeing the signs that the US shale industry began cutting production, once prices went back up, the US shale industry ramped up production once again. Okay, so we're seeing now the flexibility of this market. Okay, another thing that why I'm bearish on oil prices, in 9 days from now in Doha, capital of Qatar, there's a meeting between OPEC and non-OPEC members. Okay, that's also something oil bulls are hopeful for. Okay, a meeting to freeze production. Now, first of all, it's hard to get Iran, Saudi Arabia, and Russia agreeing on anything. These are the main producers involved. Each one wants the others to cut, which makes sense. Everybody wants a higher price of oil and to sell as much oil at the highest price possible. Secondly, even if they might make a declaration agreeing on a freeze, okay? And they'll freeze production. For Iran, at least, that means freezing production, not at what they're producing now, but waiting for production to rise up to pre-crisis levels or some arbitrary levels, and then from there they can freeze production. Now, even if they do agree on something, even if it might not be serious, even if they do agree on something serious, there's a question of trust and implementation, okay? So for years now, OPEC has missed its own quotas. It means everybody's pumping at the maximum, including Saudi Arabia. Everybody wants Saudi Arabia to cut, and it doesn't happen. So another thing, at current oil prices, there isn't really a motivation to cut production. Of course, they would like the prices to be much higher, but it's not panic levels. It's not under 30 like was just back in February. So I don't see any kind of urge to act now. Okay, so flexibility in U.S. shale industry. Low chances of reaching any kind of serious and implementable agreement are the main reasons that I see oil prices at least not staging any kind of a significant recovery. Okay, this morning we're seeing it rise, but I think that towards the end of the day, actually that was your original question, I think that later in the day, well, so far we haven't made it above 38.35, but I see it sliding back down, not reaching $40. At least it has left its downwards channel in H4. Okay. Yeah, I mean, oil prices are looking better, that's for sure. Yeah, I can see the downward channel you're talking about. We had a break to the upside. Yeah, now maybe we're in a channel towards the upside, and I suspect we could break down from this new channel before reaching $40. Okay, due to fundamentals. All right. More questions or just tell if you haven't noticed on FX Street they're warming up for a new site. You can watch the beta version over there. I think it looks really great, so I would note that. We'll soon reach the wrap-up and the preview for next week. Let's take another look at Euro-dollar. This morning is a bit sliding, but of course from high levels. All right. Yeah. Let's see if I didn't miss anything I want to talk about this morning. I didn't show you what I usually like to show. The expectations for a rate hike according to bond markets in the United States. And I must say it hasn't moved too much. That's why I haven't shown it so far. But let's take another look. Of course, for April 27th is the next meeting. Basically no chance. June, which I still believe there is a chance for a rate hike if things do improve. As we've heard from some doves turned hawkish. But currently, according to bond markets and after Yellen's testimony, of course, it doesn't seem likely according to bond markets. It's basically 1/6 chance for a rate hike. And well, 83% against a rate hike. Moving forward along the calendar, no, 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 and no. Only in December, hardly. So actually yesterday, we've seen a fall in the chances for a rate hike in December. It was 42. Sorry, it was yeah. Yeah, it was 58% for a rate hike in December. Now it's only 52. So it doesn't bode well. But you never know. We have important figures next week. Let's talk about dollar yen. Frustrating for us Brits trading GBP at the moment. Yeah. Living here in Barcelona, I know lots of British expats that live here, and those of them that have savings in British pounds are seeing Spain not as cheap as it used to be, still cheaper than in the UK. Anyway, I want to speak about dollar yen. So I see resistance here at 109 because first it's a round number and that's where the pair stalled earlier today in the Asian session. The low is 107.66. It was a swing low, so perhaps another attempt to break under the round number of 108, where the pair traded more than under 108, is more likely than at 107.66. There is talk in the markets that the Bank of Japan will have more legitimacy to intervene when dollar yen falls to 105. 110 remains resistance. As I mentioned before, it's a mix of profit taking, the current bounce in dollar yen, profit taking towards the weekend. Finally, some reaction to what the Japanese government, Japanese central bank is saying, that they're not happy with the price. On the other hand, they've been warned by the United States, by the G20, not to intervene. They would need really a justification. It's the world's third largest economy, and directly intervening in foreign exchange is more problematic than just printing more money, setting negative rates, which is more legitimate and is seen as a monetary policy that supports the local economy. Of course, the best immediate support for the local economy would be a weaker currency, but sort of they're not allowed to do that out loud, to directly intervene in markets. Okay, so this week we have had a story of a stronger yen. In general, the markets have been defying the Bank of Japan. When after the negative deposit rate, dollar yen was at 121.50. Since then, we fell a lot, breaking the 116 line in the sand where they managed to influence the pair before, breaking the double bottom where it seemed like they intervened of 111, and breaking the very round number of 110. And yeah, now we're seeing a recovery. Maybe we'll see an attempt also a break above 109. It's not such a strong line of resistance, but yeah, we've reached 108.99 this morning. But I think the trend remains to the downside. This is a necessary correction, profit taking towards the weekend, you name it. Okay. Yeah, you came to London last year to help out. Well, the British people thank you, Sinatra, I guess. Can't speak on their behalf. But the Queen would not let us in, though the flag was on top of Buckingham Palace. It might sound funny, but I developed a Fibel for trading in these places, traded in Frankfurt, Barcelona. Okay, Jake says, let us know when you're coming again. We'll make sure she's available. Yeah, I think she has some duties as the Queen of England, but she may get tired of them. She's already more than 60 years there in power. Yes, many ways to trade. Yeah, different atmosphere, different luck. Anyway, it's time for the wrap up for today, and then as usual, we'll do the preview for next week. So this is the wrap up for the live market open for April 8th. It's a Friday. It's been a long week, especially for the yen. We're finally seeing a bounce back in dollar yen and yen pairs in general, profit taking ahead of the weekend, job owning from the BOJ, and some stability in other places. Watch out for a slide in copper. That's sort of a back burner story at the moment. Yesterday was quite an eventful day. The ECB meeting minutes, which is in many cases a non-event, was significant. They told us that they were discussing further rate cuts back in March, more than they did from -30 to -40, and that making such a cut would send the pair to the lower bound. So we know now that the ECB can further cut, and we're not at the lower bound. That's different from what Draghi said. That's one of the things that returned euro-dollar from the rally back to the previous range. US figures were okay. Draghi did not break new ground. It was mostly the ECB meeting minutes. Well, he's responsible for that as well. We had the Yellen sounding not extremely dovish. That helped the dollar, well, just a bit, because, well, she was so dovish last week. This time, in meeting with her three predecessors, she was sort of okay. Yeah, those are the main events. Today in the agenda, before we look at the charts, we had a positive German trade balance, which most importantly showed a rise in exports. We have a double feature from the United Kingdom at 8:30 GMT, just in 45 minutes or so. manufacturing output with industrial output. It's basically the same release, but sometimes there are differences there. And the trade balance release, expectations are for more of the same on all of them. We can always have surprises. We need all figures to go in one direction to have a significant response. Okay, at 12:30 GMT, we have the Canadian jobs report. For me, the main event for today. I know that many traders shy away from the loonie, but it does move quite nicely. And a speech by Bill Dudley, number 3 at the Federal Reserve after Yellen and Fisher, and he's a dove, a light dove, I would say, not an extreme one. Okay, so let's look at charts in this wrap up. Okay, as we speak, dollar yen is moving above 109, so this profit taking extends. Quite a nice move there. That means the yen is weakening across the board. 110 is the next resistance, followed by 111. Lots of round numbers here. The low so far has been 107.66. Moving to euro dollar, support at 113.35, resistance 114.10. Euro dollar moved to the previous range. The extended range is 114.60, a veteran line, and 112.50. Pound dollar, well, rising a bit this morning. This could be the beginning of the front running, this big move from support at 140.50, now all the way to 141. Could be expectations for a better than expected industrial output, manufacturing output release in the UK. Perhaps if the actual result is, well, as expected or even a bit to the downside, we could have a reversal of this move. This looks to me like the typical front running more than anything else, but it could be also some risk on sentiment because we're seeing commodity currencies rise as well. So dollar CAD getting closer to support at 130.80, followed by 130 resistance, 131.70 and 132.20. Aussie dollar moving a bit higher, found support at the around 75 number, further resistance at 76. Watch out for copper prices. And the Kiwi dollar at 67.86, under resistance 68.20, support at 67. Okay, so that's the wrap up for today. Now we'll talk about events coming up next week. So this is the preview for the week of April 11th to April 15th. On Monday, it's a relatively light day, but we have the release of Chinese inflation figures. It's sort of a warm-up for the GDP release, of importance for the Australian dollar, of importance for other currencies as well. On Tuesday, we have also a relatively light day, UK inflation figures, critical for the pound, critical for the next moves by the Bank of England. The Bank of England, of course, is sitting on its hands for over 7 years, but it matters on the way they communicate and how many members vote for any kind of move. Probably will be weak. On Wednesday, things get much busier. It's a big day for the United States with retail sales. Consumption is huge in the United States of America. And we also have the producer price index, the PPI, a warm-up for the CPI. It's a big day for Canada because we have the weekly oil inventories, and more importantly, the rate decision from Canada. No changes expected. The government stimulus package is supposed to do the work for the Bank of Canada. Thursday is a busy day. We have the jobs report in Australia. A big day for Australia because the jobs report, of course, important monthly, and Chinese trade balance, another warm-up for GDP. We also have the UK rate decision. So again, what I mentioned, inflation feeds into this event. We're not expecting, of course, any change in rates in the UK, but the meeting minutes are released at the same time, and they may reflect the mood. We could see more and more worries about Brexit, okay? And US inflation figures, remember last time, they were released on the day the Fed made its decision, and they came out relatively strong with core CPI at 2.3. Let's see if it repeats itself this time, if inflation is really picking up. And on Friday, I mentioned this already a few times, we have Chinese GDP, also industrial output. Nobody really believes the actual numbers, but they still move markets. So it's always interesting that a country so big as China with the #1 in population, #2 in the economy, manages to get these numbers 15 minutes after the quarter ends. Anyway, this has a big impact on the Australian dollar, and also if we look at the Fed says it moves according to the global economy, and the #1 country when we talk about the globe is China. So let's see what's going on there. And on Friday, we have US consumer sentiment, a preliminary release by the University of Michigan, having sort of the last word in the week, giving us, we have retail sales for March and consumer sentiment for April to provide us a wider picture of the US consumer. Okay, so that's a preview for the week of April 11th to 15th. Let's see if you have any questions before we sign off for the day. Yeah, talking about the queen. Look at pound dollar. Yeah, just she's too lazy to get down the flag sometimes. Yeah, pound strength is building. Let's take another look at that before we go head off. So wow, it's was just talking about 141. We're already at 141. 20, I would say that US dollar is losing some ground. Also seeing euro dollar sliding. So now, yeah, quite a big move from bouncing from support at 140.50, over 70 pips higher. This is a mix of some US dollar sell-off that we're seeing also in other currencies. Fresh dollar sell-off, but also I believe we could be seeing here some front running ahead of the figures released in the UK in around 40 minutes or so. Okay, so we're seeing also euro dollar as we speak strengthening just a bit, but well, basically balanced for the day and maintaining the range. All right. So thank you very much, everybody, for coming on to all the shows this week. Thank you very much, Dinda, for helping me out, especially yesterday when I had technical issues. Thank you, everybody, for surviving a turbulent week. Wish everybody a safe and successful day in markets. Very happy weekend, and we'll be here tomorrow. So thank you and bye-bye.